This drop has signaled further losses for cryptocurrencies, and it is looking likely that there's going to be more downside. However, as always, I've got some good news for you. And if you're a crypto trading degenerate, I've got even better news for you. So smash up the likes. Let's go for 3,000 today. Subscribe to the channel if you haven't already. We're nearly at 3,000 each video, so much appreciated to you guys that are sticking it out day in, day out. Sometimes it gets boring out there, but often I love seeing your comments here down below. Lots of good things going on. So without further ado, you've reached your home of macro cycle analysis with me, Jason Pezzino, covering Bitcoin, cryptos, the stock markets, and of course, the real estate cycle. We're covering it all here, and I'll show you how in today's video. All right, let's have a look at the traditional markets, also covering the economic data that's coming out so we can get on with the show at hand. Obviously, Bitcoin's down, cryptocurrencies are down, more looks like it's on the way, but of course, we want to find the stronger cryptocurrencies out there for that next stage of the bull run. If in fact we do get some. From yesterday's video, it looked like some people were losing hope that there was going to be any sort of further altcoin season. We're all doomed, obviously, with a bit of a laugh here. But anyway, onto the data that is coming out until the next time there is some more important data in terms of the CPI. Today we've got core CPI, CPI month over month, CPI year over year. Then we've got the federal funds rate, finally, the interest rate decision, which is still looking likely going to be on pause for yet another meeting, which then brings us out to roughly about 11 months at the same interest rate, 5.5%. As you remember, as you recall, the majority of people were expecting interest rate cuts. But of course, we aren't the majority here. We are the minority, let's call it that. Anyway, moving on, we've got that meeting, we've got employment data for the Aussies here, and then towards the end of the week on Thursday, core PPI for the US. Each time this comes up, and this is an important one to note, put it in your notebooks, when we see new people come into the face, new investors, they typically get caught up in these announcements. They think these announcements run the market. Personally, from my experience over the last 18 years, this stuff does not run the markets. However, the masses continue to wait in anticipation of the data to come out to tell them if the market's going to go up or down. I prefer to use a chart. It's far easier and has far better results. And what we can see when there are new investors coming in is that they get fearful of these events that come up. And I see it in the comments section. They'll say, but what about the PPI that's coming up, or the CPI, or this announcement, or that announcement? And that allows me to see when we have more new faces joining the markets. I suspect, here's one of my my forecasts now, I suspect we'll see more of those people coming throughout the end of 2024 and 2025 as the markets continue to creep higher. Now, we saw that today in the S&P 500. Guess what? A new all-time high price with a new all-time high daily close. And I hear them already saying that was because of Apple. Yes, Apple did have a mega day. It punched to new all-time highs. And if I'm not mistaken here, it's the first time it's hit $200 after the however many stock splits it's had over its entire history. So it's back at a new all-time high price, now at $207. There was an announcement here of Apple getting into AI. I guess it was a matter of time. So I don't think it takes us by surprise that it was going to happen. But of course, when it did happen, you had the big wind up on the chart here, tops and lows, essentially a trading range forming over the last, you would say, at least from July. So nearly 12-month trading range. And now we finally see a breakout. Now, if you've been following the channel, as obviously I suggest everyone do, but of course I'm biased, then we know that laggards will lag and leaders will lead. Apple has been a leading stock here. And it is the second largest company in the world, or in the US at least. Anyway, it's a massive company. Everyone knows it around the world. Even in developing third world countries, people know of Apple. What majority do is even the specialists, the analysts, as we discussed in yesterday's video, they get in on some of the laggards. I mean, I'm just pointing at stuff here, but you've got lagging stocks, and the same thing happens in cryptocurrency. So it's a big lesson for us in cryptos in a moment. And I've got a few just to show you here coming up, the laggards. The leaders are going to keep producing greater and greater results, and the laggards will lag. They'll give you some results, but they're not going to give you the results that the leaders are giving you, and they're a leader for a reason. So with that in mind, well, we've got new all-time highs on the S&P 500. We've got new all-time highs on the NASDAQ, new all-time high prices, new all-time high daily closes, and the markets continue to grind higher on the back of our seasonal pattern here. The main thing to remember here, we're just looking at the possibility of the market grinding higher, potentially moving into a correction later in the year. That comes in at roughly around Q3 into Q4. Obviously, we got the election in November, so call it around Q3, Q4. So this is just a simple reminder here as we review it on a daily basis while the market continues to play ball with the cycles. There's no point in changing up the theory unless it gets invalidated. And right now, this is not invalidated. So just keep following the plan. Make it easy for ourselves. What has also been quite easy is watching the VIX. Now, I first started looking at this on the channel publicly around 2022. We saw the cycle low for the S&P come in. And what this is it's the volatility for the S&P 500. And what you would want to see if you're moving into a bull market or prices moving higher on the S&P 500 is you want to see this chart go down and then stay down in the bull market zone. Some of you OGs on the channel remember when I first started talking about this, what got me triggered on it was another pretty big YouTube and other channels talking about how this volatility index was telling us that it was signaling we're going to see a collapse in the market. This was 2 years ago. Those guys were trying to short a rising market all the way up. And I only bring this up so that you don't get caught in the trap anytime in the future where they were trying to say collapse, market's going to collapse, market's going to collapse. Every time there was a move down, they were saying it's going to collapse. Meanwhile, the volatility, at least one of our signals, was showing us that the markets overall, the economy, the markets, the stock markets, investors, were moving into a less volatile state. And these less volatile states bring on bull markets. And it happened again. So when you start to see the patterns form time and time again, I guess it makes life a little bit easier in trading and investing, but I never want to get complacent and try to stay as humble as possible because the markets have a very good way of slapping that straight back in your face. What we can see here is that while it remains in this zone here, about your 17 to 11 on the volatility index, we're likely going to be in a bull market. So if we're likely going to remain in a bull market for the S&P 500, then it's likely that we're going to continue to see higher prices for Bitcoin and for cryptocurrencies. So that's a quick update on the volatility index. We're still in our bull market grinding zone here, and things are looking pretty rosy. Now, something that isn't rosy, and we discussed it on yesterday's video in regards to the fear and greed index, it seems a little bit cooked. After yesterday's drop for Bitcoin, Bitcoin was down 3% on the day, but the total trading range from the high to the low was 5% and a $3,500 bar. Well, the fear and greed index is still sitting at greed. And the interesting thing here with comments, so some people have felt a bit of a hit on the portfolio, or at least seen how some of these cryptos can fall 30, 40, 50%. Whereas others are saying, yeah, 2 to 3%, it's depressing. Well, it obviously depends on which cryptos you are holding, obviously Bitcoin or some of the other smaller altcoins, risk and reward. That's the game, right? If you're holding stuff that is less volatile, you're going to see less volatility on the downside, but also to the upside, generally speaking. And if you're holding stuff that has bigger moves to the downside, well, hopefully it's something strong, which I'll show you in a moment. And so that when the time does come and we see an upside again, we see this sort of altcoin season, then those are hopefully going to do better than the altcoins which aren't doing so well, which aren't faring so well. So where we sit with Bitcoin after looking at this potentially cooked fear and greed index, where it's still sitting in the greed section of the chart here. I don't know how, but anyway, Bitcoin hasn't necessarily moved out of any sort of strong zone. We're still above, or Bitcoin is still above $65,000. And it did come right back and test the 50% level at $66,000. So this shorter term 50%. So this is from that higher swing low. You can see there is the bottom so far. There is your swing out. There is your higher swing low. So we're measuring from that low to this current top that just came in. That also lined up pretty well with one of our other signals here. This one right there, what I put out on last week on the channel, our looming fourth time. So this was looking at the weekly count to the upside. Congratulations to you guys that were following along and saw this thing play out. Pretty crazy. It still surprises me too. But anyway, we're here now, 50%, 66K to the downside, 65K is the total range. So yes, there was a 5% daily move yesterday, but it's still, Bitcoin still has not broken down from the $65,000 level. If it does, then that is a little more troublesome. You would expect that the market would remain underneath these levels for longer unless it got quickly back above. So we know markets can drop quickly, test levels, but as long as the closes are above the previous resistance zones, which then become support, then that's not such a bad option. But if it starts to close underneath 65K, then you probably want to watch out for the next support level at around $60,000 to $62,000. For now, it seems like it was just a flash crash, a bit of a flash dump there, and the close was still above $67,000. So here's a little reminder to myself and hopefully to you guys, you put in your own trading journals. That was the day we watched over the last week, the 4th of June, with the 4th highest ETF inflows. That then became almost the top. And that was the excitement day. And we've now seen a correction from there. So the people who bought in near a top again, at least in a excitement sense, market sentiment type of view, they're now in losses. And as harsh as it sounds, it's what you want to see in these accumulation or consolidation phases. You want to shake out the hands that come in late and reward those who have patience. And so if you don't have patience or you find it hard to have patience in the market, take that as a lesson again and continue to follow the charts and avoid the hypes as it gets towards further extremes. And of course, last week wasn't the biggest hype, but there was a little more excitement in the market, and it seemed like we did need to get a washout of that excitement, just like with the peak euphoria. Now, this peak in March of Bitcoin, we'll come to know it as the Drake peak. Thanks to you guys who commented that somewhere down here. You guys came up with that call. The reason being is at that peak, the extreme euphoria we saw and felt back in March was when Drake posted about Bitcoin and posted about Michael Saylor on his Instagram to over 100 million people. That is the sort of shit you see at tops time and time again. So when you start seeing that stuff happen again, and I mean, I'm in the camp that I think Bitcoin's going to get much higher. I think we're going to see a breakout of $74,000 probably in 2024. Once we start to see those sort of things happen time and time again, I would strongly urge I'd strongly urge people to not get too excited with their wallets and start buying up more and more. We've got the Drake peak, we've got ETF inflow peaks, and now we've corrected again. That does not mean that the market has to collapse. Obviously, we can see from that Drake peak that we did get a correction, 23%, but it didn't necessarily collapse and break down from previous significant support zones. So that leads us over to the weekly chart here for Bitcoin and how long could this last. Now, I've mentioned several times before that my view is somewhere around 4 to 6 months. 4 to 6 months underneath the old all-time high after it quickly broke through these timeframes. The timeframes there of around 2 weeks to about a month and a half, or month and a half there. And what I'm looking at is the signal that we've all come to know being the 3 days down at this signal right here. We had 3 lower highs and lower lows in a row, and that brought on a correction that would last longer than most could handle, okay? And that has now happened, and I think we might be going into that space of roughly 4 to 6 months. We're at 3 months now. So 4 months takes us out to July, and 6 months takes us out to September. So sometime in Q3 is probably where we would see a breakout to the upside. I'm putting my neck out on the line here, just looking at timeframes from the past. If it happens in June, okay, it happened 3.5 months. I think that's still a pretty good signal to use. And personally, it has helped me out a lot in this stage, considering where we were 3 months ago and the extreme hype of the masses back in March. I'd rather remain on the cautious side because at the end of the day, it's my money in the market. I don't need to get super excited about anything. I just want to trade the market as I see it. So that's what I've got here. We've covered it. I think it's important to keep coming back to our journals. And for me, this is a big one to remind me to remain patient because we haven't seen any further breakdowns. And if this takes that 4 to 6 months, well, that's what we've seen in history when we see that same signal. And we've gone back and checked it in previous videos. So where does that leave cryptos and further losses now, further downside? Well, let's start with Ethereum, then get on to some of the others. ETH has a day down now of 4.5%, and at the moment, still dropping, about 1% down. It did come back and test 50%, held above it, sitting on 50% support for now. But even if this is to break down, we've got some other support back at $3,200. So as always, it doesn't mean that the market will have to get there, but at least we can see that there is still further support to the downside here for Ethereum should it break down from the 50% level. And that's a more bullish look at any sort of breakdowns and support. What if this is it? What if the market is over? Remember, we had all of the left-hand translated cycle people here in March of 2024 suggesting that that was the peak and we're going to see a collapse. And of course, that's all gone silent because, well, the market's basically been grinding in a trading range for 3 months. But what if? What if that's the top? Well, you'd need to see, in this case, Ethereum break down from the 50% support, which it's hit multiple times here, and that's at $2,800 to $2,900. Now, of course, wicks and closes above, different story, but a breakdown and closes beneath that would suggest that either A, cycle's over, or B, it's going to have a very hard time putting in significant gains to the upside whenever the altcoin season comes back and more excitement comes back into the markets. In the meantime, plenty of other things you can do. You can obviously trade the markets like Michael and some of our other traders here in TIA. Links to this are obviously in the video description, top of the video description. You should have received your free crypto and economic report this week that came out last night. And otherwise, you've got TIA Premium that you can check out to get on board with short-term trading, long-term trading, setting up those your investment plans for the coming years ahead. Now, plenty of data to go through here, or plenty of results that you can go back and check. There are some losses and little comments here as well that you can go through and review for yourself. And you'll get into this free Discord community up here by clicking the link in the top of the video description, subscribing to the free report, and you'll get an email to your inbox with a link to join. All right, on to cryptocurrencies now. This is a total cryptocurrency market cap excluding Bitcoin and ETH, but it does include stablecoins in this case, just so we can keep some of the lines on the chart here. Most importantly, the swing indicator. We've got a breakdown of the zone here of that slight grind up. Now, what we're looking out for is any sort of higher low to form. Otherwise, game over. Invalidation sets in, 50% breakdown, low breaks down here, which was that April higher low. So that's roughly around $540 to $550 billion. At this stage, well, you've still got higher lows in play and the timeframes are still well and truly in check. So although prices are going down, I'm still looking for stronger altcoins to position myself or reposition other altcoins which seem weak in my portfolio. And that's what I'm looking at when it comes to act now. Act now in the market. Start to look at how you can best position yourself for that next move up, if you believe there is another move up. As for the altcoin chart, this is the first level I'll be watching, 540 to 550 billion. Then we've got the higher swing low here at 440 billion. And then the previous accumulation zone is back under 400 billion. Market gets underneath that point. Sure, it's a long way down, but that would suggest that there's probably not going to be an altcoin season. So I don't expect that to happen. Of course, it could, but I don't think that's likely at this stage. Now, if you understand what that means in a technical sense, that it's basically game over underneath previous accumulation zones, then you can understand how significant that is for different altcoins and the losers or laggards versus the winners or leaders. And in this sense, it's very unfortunate, but you've got things like ADA, which is back underneath previous accumulation zones. So that price has begun to break down, and it happens every single cycle. And maybe the next cycle, this will come back and outperform. But right now, it is terrible. It's underperformed Bitcoin. It's up. What you'll hear from people is that, well, what are you talking about? I'm up 70%. Mate, have a look at Bitcoin from the exact same timeframes. Bitcoin at around the 16th of October to where it is now is up 134%. Poor ADA is up 70%, basically half. So this is heavily underperforming Bitcoin. And you can see that even more quickly from the ADA BTC chart. There is the October reference point. Now it has hit a new fresh low. That is a terrible performing altcoin considering what Bitcoin has done. So you would have been better off holding Bitcoin throughout this entire period. Basically, throughout the peak, well, since the peak in 2021, nearly 3 years ago, you'd be better off holding Bitcoin than Cardano. So that is the simple look at how to use Bitcoin charts and how to get out of slow, lagging altcoins and into something stronger, which I'll show you in just a sec. But it's the same mindset, the same mentality that comes up with this, but it's down now and it can come back. What if it was just to do back to the previous old all-time high? This is stupid thinking, and it's the thinking for the poor. That's how poor people think. They go, what if it does that? It's based on nothing. Why would it do that in the first place? Why would this thing go up like that? Because it did it before, but why would it do that? Why aren't people buying it now and it going up? Why isn't it strong now? And why wasn't it strong throughout that entire period when meme coins were strong, AI was strong, everything else was doing gains? Why wasn't it doing that? Why isn't it strong prior to that? Like, it doesn't make sense to think that something must do something because it hit a high price back then. There's no confirmation in the chart as well. No one is saying that it's going to break higher. The swings are down. It keeps putting in new lows. It's a piece of junk right now. And of course, I can't go a video without talking about XRP. So if you think you're feeling bad about ADA, don't feel bad. Like, XRP is an absolute piece of trash. It's been down since 2017. Like, that's 7 years of pain. It's just ridiculous. The only people getting rich in this are the CEOs, the CFOs, and all those people in the companies. Like, I see so much advertising for XRP. It's crazy. So they're just selling off XRP, taking that money, advertising it, getting more new people in, more new investors to think that this is going to be the next big thing. Of course, maybe one day it is. You can come back at me and do all that, but this is the sign of a very, very weak crypto. New lows after new lows. And yes, it will have small pumps, but are you in it for small pumps? Probably not. So that's some of the weaker stuff here, and I could go through a long list of other things that have basically been breaking down from their breakout points. So you can see there's April. It's broken down from that low, which has been a higher low on other cryptocurrencies, and here is the October breakout. So it's on its way back to that October breakout point. We can pick on absolutely anything else here. Let's pick on DOT. Absolute piece of trash. Just continues down and down and down and down. And ICP is usually a fun one. Again, keeps going down, and it broke the March low, broke the April low, and just keeps going down. So this is the sort of stuff that gets people hyped up, and then it just shits on them, just comes back and shits in their face. So we're in Link now, and try it again. Probably not the worst out of the bunch because it hasn't broken those lows, but once it does, I would be running for the hills. Now, I'm not a fanboy of any of these. I'm just looking at stronger charts, and these charts can change, which is why you've got to rotate. But in this case, Solana is still above those previous lows, and it did break down from this recent low on the 7th of January. So it's a shorter term one here. So I'm going to delete that and get rid of this 50% level and look at another 50% level here, which is the major range. You'd want to see it back above $164 for a sign of short-term strength. For now, it's still above this level, 137, and still above the low here in May and also April. So that's one of my main reference points there. So anything above around 100, 120, not so bad. Above 137 would be ideal, but you've still got a bit of support further back. Something else that has been holding up well, obviously the meme coins. You can get into Pepe. It's been on a long stretch. It's still above the 50% level here, the 900 there, and then the higher low in April, a long way from that low. So a breakdown beneath that sort of 400 is obviously weak, but that's a long way from it. It's been showing pretty significant signs of strength. And then you could throw one of the AI tokens into the mix here. Render, It is above 50%. That trend to me looks like it wants to come back and test these levels. Obviously downtrend, no signs of support coming in yet. So I'd be cautious here whether it is going to break down. And this correction was 54% from the highs. And what we know from other altcoin seasons, especially in that first run out, is typically they'll do about 60% to 80% corrections from those first moves. Take Solana as an example here. Now, I showed this to our members early this morning, but I think it's one of the good examples to have a look at. Solana on that first real big pump from 50 cents to $5, so a 10x before the major altcoin season started, then went on a correction of their 60%. You had there, big bounce. Then it came back down to 73, basically 80%. It had an 80% correction against the US dollar, and then very quickly took off from that point. It was a roughly 114 days underneath that first top. So 114 days, getting close to 4 months. Maybe we get close to that this time round. That was to the low. And then for the breakout was about 155. So about 5 months. If I got my numbers right, you guys can correct me. About 5 months underneath that previous top, which was the old all-time high before you really started to get a move on. But the mind games start before that peak. Because you're at $1.40, all of a sudden it jumps quickly to $3.80, and a lot of people are waiting for it to correct, and it doesn't correct. They get locked out of the entire move to the upside because they keep waiting for some sort of significant correction, and they look back just a few days and say, oh, the price was $2, it could go back there. And then all of a sudden it's at $6. Oh, it could go back to $3. And then it's at $17. Oh, well, it could go back to under $10, and it just never does. Well, unless you're willing to wait 2 years before it get back to $8. But by that stage, there's a lot of hopes and dreams that have been busted by that point. So that's a look at the weak, stronger type of charts as well, and the stronger type of charts, I should say, and then what we're looking out for in the total cryptocurrency market cap. So that was a mega altcoin review today. Hit that like button. Thanks again for all your comments. I get a pretty good crack out of these sometimes, and I'll keep improving on those video intros for you guys. All right, until the next video, take care and peace out.